Hi folks, it's Doc Severson for the TheoTrade report for Tuesday, January 10th. Right now this market is lacking a catalyst to be able to drive it in one direction or another. In just a second I'll show you what two alternatives that we have, but right now we're seeing kind of this shell game which is caused by shuffling assets from one to another. We're just going through rotation to rotation to rotation, but again this shell game is kicked off by things like, again, oil dropping down. So, of course, energy companies took it on the chin today. So that affected the Dow Industrials, and Bob Pisani remains on station waiting for Dow 20,000. So that money rotated over to the Russell 2000 with small caps, which went up by about 1% today, about 13 handles, right? So trading within the range. And as well as technology was the beneficiary of some of that money rotation as well too, with the Nasdaq actually going up very strongly early on and then fading a lot of those gains. So a lot of this was based on Amazon. So Amazon was up early and then ended up fading down about a point for the day. Lately, Apple's been strong as well too, but that's been faded as well too. So again, this is a very small shell game going on with the money just rotating back and forth, back and forth, back and forth, almost like playing catch and looking for some kind of direction, some kind of catalyst to drive this market. Now, one of the problems is, again, the catalyst came along with the election. The catalyst came along earlier in last year with the Brexit, but what is the catalyst now? So lacking the catalyst, you can see what happened after Brexit. We went sideways for months before finally plunging down, creating that slingshot move, waiting for the next catalyst now after the election. And you can see this just from a technical perspective, looking at the Russell in this case, is that when we have these larger time frames showing linear moves like this, they tend to not continue in that same direction once the chop indicator, in this case of fractal energy, goes below 38.2. So we typically will see this consolidate for a number of weeks before this is ready to make a move. Now, you have to ask yourself at this point, what does the market really want? Do people really want to buy the new highs up at 1400? Probably not. This is what's happening as the price gets up near 1400, in this case at 1392, and then people are selling that, rotating assets into something else. So traders are just playing this range right now. It's about a 40 handle range on the Russell, selling the highs, buying the lows, going back and forth. This is all we're seeing is this small scale rotation. However, going higher from here is probably not going to happen without causing some type of a throwover. However, when we have consolidation like this can take a long time to go sideways like that. Buying the lows, selling the highs, rotating into something else. What can happen, though, to speed this up is if the price goes down quickly. Counter trend will cause this to charge up very, very quickly because this will shuffle around a lot of capital around in this area. So maybe retesting that breakout around 1300 will get things shaken up. All we need to see is some kind of catalyst that's going to rock the market, cause this sort of small scale shuffling around of funds playing catch, right, will stop at that point. Now, what we've been playing lately to take advantage of this has been things like time spreads, setting up short-term weekly time spreads to take advantage of stocks that are kind of jammed up against all-time highs and have nowhere to go. Doesn't take much movement to be able to create a nice return on there. We could also look at low probability iron condors, which give a nice return in just a short period of time. Typically setting up one of those types of trades with a 1-to-1 reward to risk nets us about a 20% return on risk in about 5 days. The other trades that we're going to look to start this week is the earnings trades. Now, typically when you hear people talking about earnings trades, they're looking to sell premium and set up strike prices outside the expected move. So setting up something like a wide iron condor. And unfortunately, what we have to do is to get outside that one standard deviation is to set it up as a high probability condor. So what we're looking for is for the price to stay within this range, within this one standard deviation range, and set up the trade such that what typically happens on these is the implied volatility collapses right after the release and the price stays within there in a perfect world, and you get a nice return on something like that. Unfortunately, what occurs is Enough of these create more than one standard deviation, so you get fat tail movements which end up robbing you of many of the profits of the working trade. So unless you're a great picker of these, setting these trades up is usually setting up to reward the broker and nobody else. Now, what we can do, though, instead is just to not necessarily take a lot of risk with these trades, just take a directional move. Look at the direction that many of these, so the majority of these releases have created some type of upside reaction. Now, I don't know whether or not these financials have any room to go right now, especially with this exhaustion move, but typically there's enough movement after this that even something placed at the money allows us a chance to be profitable for this. And for these types of trades, we're going to be using just a simple vertical spread placed at the money, where we're not looking at really a volatility trade, right? So the volatility collapse can collapse on this and it still won't hurt the trade. All we're looking for is just some movement around here to be able to take off the trade. And we're going to be placing these with very, very little time left to go for the trades. And as you can see, for a lot of these, you can play these with half point wide spread. So you can basically create a trade that risks only 25 bucks per contract. So ideal for a small account to be able to play earnings cycle without risking a whole lot of capital. We're going to get movement soon. We'll see what the next catalyst is going to be. Unlikely to be earnings. It's probably more going to be something to do with policy and some unknown, unpriced in piece of data that comes along, which the market has not properly discounted. So we'll see what that is. It's always fun to watch the price movement from that point. That is it for today's report. Thanks for listening, folks. We'll see you tomorrow.